Hello everyone and welcome back to my channel. I hope you guys have all had an amazing weekend and got off the computers and the charts and went and did something fun and exciting. Today I'm really quickly I know I talk fast enough, but I just wanted to kind of go over this Trading Edge software a little bit and show exactly what it is, what I think of it, and I don't know if it's a product review, but I used it and they already have my money because I didn't cancel it in time. So I may as well use it to kind of show an idea of what we do in our morning classes within our memberships, within the company that I will be launching, as well as the other companies that I am coaching for. So with that said, as you can see, I've got a couple of tabs open here in my Safari window. So nothing fancy, nothing, too flashy here. As you can see, I marked up the dates from September 6th through the end of October 6th, I should say. And I literally just went through and marked up using the 15-minute time frame specifically every single JGS, which stands for Jenny's Golden Strategy, 15-minute US 30 entry. Now, granted, this tool does not do a really great job of showing kind of any form of management. It's just in or out, which is fine for those of y'all who trade that way. As for me, I obviously use a trade manager from cooltradingtools.com. It's just my end all be all, my go-to without a shadow of a doubt. It dynamically changes the way you trade, changes the kinds of opportunities you can look for, changes how you manage, and takes the you and the emotional and the psychological aspects and all that good jazz out of it. So for that reason, I'm going to kind of pop back and forth and just show you a little bit about what it does. So I guess I'm going to stay right here for a second. Well, I'm going to go here and just show you what this website is. Yes, there's a link in my link tree. No, I probably shouldn't say this online. I'm sure I'll get tons of feedback for it, but I don't think this is worth it. I think that you could do just as effectively with an EA, with my FX book, with FX Blue, Trading Stratogram. You've got like 50 options to choose from that can do this kind of stuff automatically, that can give you more information, if not better information. And if that still is not up your alley and EAs aren't up your alley, that's fine. You can literally have a pen and paper, which is probably quicker than the back and forth and the dual screens and the plugging and playing. The only advantage to this is if you're doing it for something like a pitch deck or something and you need the pretty chart, right? If you need the chart that says, hey, this is kind of what we're doing hypothetically. But this still doesn't give you any actual data. So just a little background on what it is. I don't personally think it's worth the cost, but since I've got it and every other YouTuber out there about Forex is using it, too many of them are, I should say, I felt like today, it's a good day. So with that said, this is 15-minute US 30, original entries only. We have a couple of indicators that we use. We have a couple of rules that are defined in a duplicatable manner, saying, hey, these are the criteria for entry. If you follow them, you should be able to achieve comparable results. Obviously, there's variables between brokers, countries, entries, so many other things that I cannot quantify or define for you, but that's kind of the approach that we teach. So in that, as you can see, we've got 30 entries. So let's see if I can't use this properly. 30 entries, 28 wins, 2 losses from a $1,500 account to a $34,000 account in 30 days, right? That's assuming you got every entry. Not very practical, but we're just going with the flow here. So profit factor is really good from somebody who's working on EAs. Well, that's stinking impressive. I wish like heck I could code some bots to make some profit factors that high, but that's neither here nor there. So Edge Score, that's their little algorithm. I don't really care too much about that because it seems more like a marketing platform, if anything, to me. And of course, I want to touch on this, if I could talk properly for a second before I go over to TradingView. What I want to mention is, despite the wins and losses and the runs, I only entered in for a $1,500 starting, I hope I don't mess this up, but a $1,500 starting balance is what I entered for, a profit of 14% or loss of 7% or a profit of 7%. So that's a 1-to-1 or 1-to-2. I did not account for all the trades that went 8-to-1 and 3-to-1 and 5-to-1. So this is kind of the bare bones, what you could potentially expect with good trading, with good management. This is it. Now, granted, I think you could perform this better with better management, but just so you kind of have an idea. And because of that, we obviously have a risk to reward ratio of about 1.79 to 1. Max drawdown is 7%. Figure you need to add in some fees and, other stuff that goes into this, but you guys kind of get the idea. You'll notice the average winner and the average loss, so you know kind of what I typed in. Sure wish it gave me a list of those trades. That would be better, but just so y'all see the whole nine. Let's go to US 30. So I have this zoomed in just so we can see this nice little box that I drew. Notice how I have all the indicators hidden for the purpose of, let's just look at this bare bones. In this 1 month period, I back tested, according to what they're calling a back test, 30 trades using JGS. 15-minute confirmed, original entries only. This is not including the re-entries, which my strategy actually teaches and goes into. Hey, what if you see a great move happen, but you miss it? How do we take those re-entries, right? This strategy actually gives you those as well. So not including any of those, just the original only. 93% of those trades, 28 to be exact, closed with or protected greater than a 1-to-1 risk to reward ratio. Now, the reason why I said it like that and not some other way, and I know it's super wordy, but here's the deal. I don't manage, point blank. I don't have my stop loss here and my take profit here, and I'm 100% in and 100% out. I have my stop loss here. I typically give that some cushion, and then I have my take profits kind of floating, and I have them protected using a technology and a really smart trade manager, right? So just so you guys kind of have an idea. But at this point, I am protected. So as long as we hit this, I have got a break even or a positive trade, at least to some extent, no matter what. And remember this, I'm using this as an example, not to say this is exactly how I run this strategy, because it is not, but just so you guys can kind of get an idea of that software and of course of the strategies and the trades that we're looking at in classes on Tuesday and Thursday mornings within the groups that I coach within. So back to this, 93% of the trades, 28 to be exact, hit greater than a 1-to-1. And this is using a 1 fractal stop loss. So 1 fractal back from the time of entry, which again, there's a lot of ways to do that. We're just defining this in a way that's duplicatable. More than 73% of them hit better than a 2-to-1, and more than 43% of them had what we call runners, meaning if you have good management, it should be flowing and flowing and flowing, depending on, you can have something that scales you out. You can have something that's really choking that, trailing stop a little bit, or what we call an exit manager. You have things that protect that, so it has room to actually get to 8-to-1 risk to reward. It has room to actually get to 5-to-1 and 3-to-1 risk to reward without necessarily negating your opportunity for profit or putting too much risk on the table by not having, those methods in place. So only 2 of them actually hit a full stop loss without ever having hit any kind of a 1-to-1 risk to reward ratio. So now that we've got all that defined, let's take a peek over at kind of, again, what that looks like. Remember, I did not in any shape, way, or form account for all the huge runners. I went bare bones just to show you what's possible. My hope is to help people realize, that it's not the strategy. It really comes down to the management. Like 100% of the time, in my humble opinion, everyone is out there pitching, selling, and promoting new strategies, tools, approaches, and all that good stuff. But at the end of the day, none of that is going to be significant if your management is not in place. If your capability to lot according to your actual leverage and your actual lot size is not in place. If those are not functioning right or kind of really well defined and mathematically suiting you, there's no good strategy, great or not. The best strategy, the 93% strategy, anything else, none of that even matters. We all hear the stories on not only the internet that says, well, hey, this guy can have a 10% accuracy ratio and still be making $1 million a month. Technically, mathematically, that is true based off of his rules and his management. You can still be profitable with a 90% losing ratio just as easily as you could be profitable with a 90% winning ratio. So anyways, this, of course, tool, let me go back to this. It shows that the win ratio is about 93%. That does follow suit. It kind of, many years ago when this strategy was created, we kind of tested in around that 93 and 97% with the re-entries and everything included. That was back on some software that was internet-based as well. Much better software, but still, I kind of already knew that's what this would equate to, give or take, at least for this. So let's go take a look. I'm going to go down to the 15-minute time frame. I tried to lock some of these so I didn't accidentally move them and manipulate them. But, we're all human, so there's no EMAs, there's no tools. We can't see the reasons or the whys for these entries per se, but anybody who's got a little bit of skill wouldn't be too hard to figure out. So I'm literally just going to start from here, Tuesday the 6th, September 2022, and scroll over. So you can see that this one never came down. That's the fractal. Oh, I really should have kept those fractals on. Darn it. Anyways, never came down to hit that fractal. We came all the way up to approximately, we can clean that up a little bit. locking it all the way up into this ratio. So almost a 3-to-1 risk to reward ratio, right? Not a bad way to be. I'll lock that just to make sure. From this entry point, which this would have been a little subjective because that's pretty big, right? It's a big stop loss depending on your account size. This one came all the way down into this area, so that's a 2.5-to-1 win to loss ratio. We've got a 2, and don't take this as exact or gospel. I'm just kind of showing you. I'm just going to go through these 30 really quickly. This one averaged less than a 2 to kind of give you an idea, but that means you should at least be protected, break even, or in profit. No matter how this looks at, if you're following good management, this was a profitable trade because at 1-to-1, you really should have some stuff locked in based off of how you're managing it. So this one's a 3. It looks huge, but it's actually not that huge. And we had other reasons for entering in around here because the conditions reset up for an original entry. This one, because of the tighter stop, averaged a 5-to-1 risk to reward ratio. And you guys can see that that came all the way up into this ratio window here. This looks like a grand move, but because of how this played out, I would not have actually taken this because it's just too big of an ask, and then there was no opportunity for a re-entry, at least according to the rules on this strategy. There were re-entries, but not an original entry, and not for a while anyways, because that's a big stop loss. So just to kind of keep moving it forward, 3-to-1 risk to reward ratio, that did hit 1.88. So again, we had the 1-to-1 without hitting the stop loss. Only again, less than 2. But this is the real. This is the good, the bad, and the ugly that I really wish more people would spend a little bit more time on. 2-to-1, that's kind of a big stop loss, so a little bit subjective in terms of if you take it based off of your account size. But to continue going, only hit a 1.74-to-1 based off of that fractal that would have been here. And this, I'm going to have to zoom in to show you, is actually one of 2 losses. So even if you had entered in here, which again, this candle, pretty subjective, but still, I would have taken it based off of the volume and how this played out. So with that said, this wicks us out. This comes up, makes a higher high, does a nice little spring, kicks our butt. So we lose this at whatever percentage of risk you were taking on your account. So the example I did was, I did 7% risk, 14% gain if it was a 2-to-1, 7% gain if it was a 1-to-1. So this trade right here would have cost me 7% plus. It's always 7% plus because there's some other things that go into this that, again, nobody really talks about. There's a lot more than just the nuance stuff. But here's our next one, 3-to-1. So 3.3-to-1. We get into some choppy, ugly stuff here, some consolidation. We still manage a 2-to-1, 1.5-to-1, and a 2-to-1. These are all rule-based entries that are all defined, all spelled out for you, and management help is given as well. Of how do we optimize, how do we capitalize, how do we manage these moves to where we're getting the most out of it, to where even on the times where we're wrong, we're still not losing our hats, you know? So 2-to-1 there, 2.8-to-1 here. And I'll zoom out a little bit again. 3.7-to-1 here. 3-to-1 here, and I highlighted this because it was a good discussion point, just because I wanted to go over it with you. Remember, one of the rules, we've got a couple of indicators and then we've got a couple of rules, is a consideration for, at the time of entry, how big would your stop loss be? And if there was a ginormous candle, we know your stop loss is going to be pretty big, so you'd be waiting for a retest on a smaller time frame. You would take this into consideration, so you might not even actually take this trade. Kind of like what we mentioned before on those really, really big ones, just because your risk to reward doesn't make it a good trade for you to consider taking. And remember, this is, again, without any knowledge of news or other stuff or fundamentals that people feel like you have to know everything in order to be good at this. This is only technical analysis, only defined rules, and only defined management. That's all this is including. Anybody who has the wherewithal has the capacity to figure this out. It is not that hard. It really, really isn't. But to continue forward, 2-to-1, that was 3-to-1, 5-to-1 here. Nice little double bottom formed. This is our next loss. So it does follow the rules. So I went through and I said anything that followed the rules according to how we have them defined, this is an entry that we're looking at. This, of course, I'm going to have to try to zoom in a bit. We would have entered right around here. Of course, it came up not quite at a 1-to-1, so this does not count as a win, and it swung down. So this is a losing trade. This is our second one to kind of give you an idea. I just don't like how that looks, but you guys get the whole idea. So this would have lost a total of 77, depending on the risk that you're using. So we got 2-to-1 risk to reward ratio, 3.2-to-1